Upper Echelon is brought to you by Deloitte for innovative thinking and thorough strategic planning. Turn to Deloitte. Well, in our Upper Echelon this week, the Chief Executive of Vox Telecom, Doug Reid. Doug, we've spoken, we know each other pretty well, but you've been a serial entrepreneur who kind of fell into the IT industry through your relationship with Control Instruments. Looking back on it, though, it's been a really rough ride over the past few years, and we'll get into that in a moment. Are you glad you went into that sector?
Yes, I think it suits my personality. I should have gone into the IT sector on leaving school, if I have to really look back. Except I think I got a lot of experience, especially in hardware retail and hardware wholesale is a more conventional, more traditional sort of industry. So I think I did learn a lot. You never sort of waste time, but I think it was a great move for me personally.
You've been running the business as pretty much the founder for the last 13, nearly 14 years. Would you, if you were to leave Vox, would you go into a similar industry? Has it caught you now, the technology sector, or would you consider going back to things like hardware?
No, if my next phase, I'd like to invest in businesses and be partially accountable to those businesses rather than on a full-time basis. And it'll be sort of bite-sized businesses depending on what my capital base is. So, for example, I wouldn't, if I had 100 million, I wouldn't invest all 100 million in one company. I would invest that over 5 or 6 smaller companies.
And you should have 100 million, but it was Dealstream that kind of kiboshed the whole story. How did your health go during that time?
You have to manage that sort of thing quite carefully. I mean, it was. I knew that obviously mentally I had to be quite strong. It's like you suffer a loss. I mean, it's not only the financial loss, but your reputational loss is quite key, especially for someone like me. People followed me, staff, family, friends, you name it, followed me into the share. And you feel, you feel you've let a lot of people down. So that side of, so what we did was my wife and I sort of discussed it, and we sort of decided to bury it like a funeral and go through the processes of anger, etc., and then put it behind you and move on. And we did that, and I think it was, I would say, reasonably successful. I would say 85-90% put it behind me. And then it was a decision of to resign and find something else to do. That was obviously on the cards, considering the circumstances. The board chatted to me. They persuaded me to stay on. I then got all the staff together and I said, look, let's just look at it logically. We built this into a bigger base. I mean, it's a 2 billion rand a year base. It's easier to treble this base than it is to start something from scratch. And then you've got to, treble is not good enough at that sort of size. So that's what we did. So we basically decided to fix up some of the mistakes. We made a couple of mistakes which compounded in that year. We made one acquisition too many. We geared up for the first time ever in terms of cash. We lost about 30 million in cash on the Dealstream story, but all in all it cost us about 60 million. In fact, more if we
so it cost the company, but you personally, of course, was much bigger than that.
Personally, yeah, we were wiped out. The majority of the staff were wiped out in its entirety. And, in some ways, I also had to sort of get in perspective. I never used that money. I mean, I deposited the money in Dealstream, geared up, ended up with around about 100 million sort of single stock futures, and I never used it. It just sat in the trust account, the so-called trust account. So it wasn't as if my lifestyle had to change too materially on that basis. And then so I had to get my head around that. It's a bit different being treated as an employee as a partner. It's a subtle difference, but it's something that you have to sort of get used to. And we sort of put our heads down and we kept the team intact. And we then had to get through a lot of other things. For example, finally the deregulation came into place. It got a lot more aggressive than we expected, which is a good and a bad thing. It allows us to compete better in the future, but in the short term it started harming some of the business models. The dial-up position in the consumers is a major contributor for us. That business model's obviously expired. We had to get that changed. And the execution is not as easy as you imagine.
It's such a stressful existence that you've had. And just for people who didn't know what happened with Dealstream, there was this criminal, you can't put it any other way, who was extremely convincing. When he spoke to me, I thought it looked absolutely above board. Clearly, from your perspective, it all looked fine. But he wasn't participating, or he wasn't following through on his side of the bargain. And as a result, he cost a lot of people a lot of money. Founders of companies, particularly, he seemed to prey on the Altex sector. But that's a part of your life that has turned you into, as you say, an employee. Now, that's maybe something I'd like to explore with you. Chief executives of companies, my good friend Jerry Skatemer says, should be rewarded, A, as managers if they are only managers. But if they are entrepreneurs who build businesses, they should be rewarded a quantum of what the managers are rewarded. That's his view. You've now, from being a entrepreneur and a chief executive who's built a business, had to, through force of circumstance, become a manager. How comfortably does that sit with you, and how comfortably do you think it would sit with other entrepreneurs?
Look, I still do the job. I still build the business. We still eat, breathe, and sleep it. I don't behave like an employee as in what can I get out of this. I try and put the business first. So that side of it, I don't think is too different. The shareholders have been extremely supportive, and they've helped in the process and made it easier for me to make those decisions, and have supported me to get out of all the different debt structures that I landed up in, etc. So from that side, it's been good. They've also understood the business. So if you, for example, this last year we were 20% down. We exceeded the budgets, etc. But it takes a special kind of shareholder to understand that you're going to go backwards before you go forward. So they have been very supportive in that base. And the company, I'm not the only person there. There are a couple of entrepreneurs. Jacques Dutoy, who runs Orion, is a good entrepreneur, and we've attracted sort of entrepreneurial people to the company. So,
are your brighter days ahead?
Yes, I'm very, very relaxed. I'm convinced now that we've bottoming out, or have bottomed out.
Then why delist at this point?
Because I don't think the main reason for me is the market's not going to change their perception for probably 2 years. We've been told by some of the institutions, when we see the growth trend, we will then buy in again, but we don't mind if we buy in at 60 cents, 80 cents, whatever it is, but we at least know there's a growth trend. So to get that round, we'd have to complete this year, and we'd have to get significantly into next year. So it's a 2-year stagnation period from the market point of view. There's quite a lot of pressure on the market in that you've got to produce the services that affects your positioning. It pegs a value that we believe is well below what the value should be. And if we private and you take the clock forward 3 to 5 years, we'll now be a very attractive acquisition target for a trade player. If we can get our EBITDAs north of 300 million fairly quickly, and we can get the growth rates back up to what they used to be, and if we can, obviously different climate, etc., and if a bit of synergistic value, if we can add another couple of 100 million in EBITDA in terms of synergy, will be a very attractive opposition for telcos, especially in this country, because they're battling to grow.
It's an interesting conundrum that the entrepreneur has, and you must have also scratched your head a little deciding whether to list or not to list. Now, you've got to be the poster boy for the guy who's had the most volatile time as a founder of a business going through the ups and downs of what a listing was. 350 cents a share at one point in time in 2007, one of the top performers on the JSE in 2006, down to a low of 34 cents. You've been taken out at 45 cents. But looking back on that, if a young entrepreneur were to come to you today and say, I'm thinking of staying private, but there is this merchant bank that wants me to list, what's your advice?
It depends. If I go back in history, it was quite important for us to list because, first of all, it gave us an opportunity to do a management buyout, and so to speak. So it gave the staff a big stake in the business. We were probably a little bit optimistic in our growth rates when we listed, mainly because we started entering the voice space and we underestimated what that would cost us, etc. And it was quite small, so a little swing here and there. I mean, if you're looking at a 12 million rand sort of EBITDA, 5 million swing is quite major. So from that aspect, it was quite good. It allowed us to make some acquisitions. The 3 rand 60 share price was never a real share price, as was the 34 cents. So I would say that we should have been, a fair value at us when we were trading at 360 would have been between 1 rand 80 and 2 rand. Then our growth was pretty good. Our EBITDAs were looking good, and we couple of mistakes we made. For example, when it got to 360, I think we started getting arrogant. So a lot of that is our self-imposed thing. I had a very short-term plan for the gearing. I wanted to get out an existing shareholder, and I wanted to get out within 6 months out of the gearing position. But what I didn't understand, which I didn't realize at the time, is first of all the public followed for the first time, and everyone was advertising single stock futures right up a South African street, if you think about it. So a lot of our shares were punted by single stock futures, which is what fueled the growth, not real numbers, etc. And then the second problem that happened there was, once we wanted to get out, it was quite difficult getting out when we were fairly valued at, say, R2, and then if you got in another major partner, like a major trade player, you'd have to come in at R1.80, and when the share price is sitting at R3. Very difficult to win that argument amongst your fellow directors, etc.
You've learned a lot about Mr. Market, but if you were to describe yourself, are you more Bill Gates or Steve Jobs? Which one would you relate to closer?
I don't think I could put myself in their company.
Well, which of the two would you relate to, though?
I think in terms of my heart, it would be Steve Jobs. In terms of my mind, it would be Bill Gates. I think Bill Gates is more of a calculating businessman. And it's quite interesting to see how his strategies have come to the fore just through very, very good business strategies.
It's interesting you
Steve
say that.
Jobs is a pure entrepreneur.
Because a recent article on you in Tech Central called you the comeback kid or the comeback guy. Do you see yourself as a comeback kid?
No, not at this stage.
I suppose you're nearly 53, so
yes, yeah. So
kid is a bit wrong. But say the comeback man.
No, well, I don't think I've come back. I mean, at the end of the day, it'll all depend. I'd say I'll give you that answer in 5 years' time.
What about your shareholders? Some of them put money in put a lot of cash into the business at higher prices than they're now taking the company public for. Is there any resentment there?
I think there always is. I mean, you're always a hero when you make money, and vice versa. But the shareholders that I now are I mean, obviously investing in it at the right price. R&B are reluctant shareholders. They got their shares from Dealstream. And Metier found an investment. So Metier have got a longer. I mean, I'm sure that. My aim is obviously for Metier to make money out of us.
You've been resilient, Doug, and I think that's probably the word that describes you best. Looking ahead, are you going to need a lot of that resilience, given that you're in an industry where prices are deflating, where there's lots of competition?
Yes, you need that resilience. I think you have to just continue reading books, expanding your mind, getting ideas. I mean, I've even dug up a book by, I think, a guy called Wickens, who's a South African, who wrote a book called The Ascendant Organization. Can't even find it in print, and I'm sort of literally photocopying it to read it. So anything just to get your mind laterally thinking on back to growth. I think growth is key for us as an organization.
Because you've had 2 rough years of
yes,
more inwardly focused, but now
we have grown some of the segments of the business extremely well. And obviously there's that decline in some of the businesses. But, at one stage, growth is a mindset. First of all, you've got to aim for it, and then you've got to try and believe that you can get it. If you don't get it, so for example, in the budget processing, I've had a lot of kickback from some of the managing directors because, a budget tends to be your measure. And if it's too low, my belief is you'll be lucky to reach it. If it's exciting and too high and you miss it and then you penalise for failure, that's also problematic. So we've tried to get that out of the reward system and get people's mindset changing, because if you start with a 30% growth target, that gets your brain working, and you work out what you actually can do, counter the deflation, the inflation on the bottom line, etc., and then you're sitting there with this fat gap, and you'll get your head around it. And I think that's what's happening now. We've got some great new products. This year, we've been very outwardly focused again. So instead of trying to tidy up, and we were highly conservative, obviously, with our numbering, and after Dealstream, we had to be. from a reputational point of view. So it's been fun this year. I mean, I've really enjoyed going to work again this year.
And hopefully it's going to remain that way into the future. Well, we look forward to welcoming back Doug Reid with his company on the stock market. Who knows, in, a few years' time. He is the Chief Executive of Vox Telecom. And Upper Echelon was brought to you by Deloitte. For innovative thinking and thorough strategic planning, turn to Deloitte.